The global financial system is currently undergoing a terminal collapse that is being hidden behind a curtain of manipulated paper contracts and deceptive mainstream media headlines. As the markets open this Monday, we are witnessing a complete decoupling between the physical reality of silver and the electronic illusion shown on your trading screens. You have been told that the system is stable, but my deep dive into the COMEX warehouse reports reveals a terrifying truth. We have officially entered stage 0, where the available physical supply has effectively vanished while the demand reaches a fever pitch. The divergence between the New York spot price and the physical reality in the East has reached an unprecedented breaking point that the big banks can no longer suppress. While the Western algorithms are programmed to slam the price down every time silver gains momentum, the Shanghai Gold Exchange is trading at a massive premium that is sucking every available ounce out of the London vaults. This is not just a market fluctuation. It is a global arbitrage warfare where the East is draining the West dry while the American investor is being lulled into a false sense of security. I have spent the last 12 hours analyzing the internal delivery notices from the LBMA, and the signals are screaming red alert as the exchange prepares to go effectively offline for physical settlement. Insiders are reporting that major institutional buyers are being offered cash incentives to walk away from their physical delivery demands because the metal simply does not exist in the vaults. This is the definition of a systemic failure, yet the ticker tape on your television continues to show a crash in the paper price to scare you into selling your generational wealth. Look closely at the registered inventory categories because they are flashing a warning that the general public is too distracted to notice. We are seeing record-breaking outflows of silver from registered to eligible status, meaning the metal is being locked away by private entities who know that a currency reset is imminent. We are approaching a mathematical certainty where the ratio of paper claims to physical ounces will exceed 500 to 1, making a total exchange default an inevitability rather than a possibility. The $114 target I am warning you about today is not just a number I pulled from thin air. It is the calculated price of silver adjusted for the massive M2 money supply inflation that has occurred since 2020. The banks have set a psychological trap at the current levels to convince you that silver is a dead asset, while they quietly accumulate every physical ounce they can find. If you fall for this paper trap and sell your physical holdings now, you are handing over your family's future security to the very cartels that are destroying the dollar. I am receiving urgent reports from the largest bullion dealers in North America, including APMEX and JM Bullion, that the supply chains for silver sovereigns and 100-ounce bars are being shut down. When the largest retailers in the world cannot guarantee immediate delivery despite a supposed price drop, you are looking at a market that is already broken. The spot price has become a total fiction, a digital ghost that no longer represents the cost of actually owning the metal in your hand. The industrial demand for silver in the solar and AI sectors is creating a structural deficit that is growing by 200 million ounces every single year, yet the mining production is stagnating. We are entering a silver squeeze that will make the 2021 Reddit movement look like a minor tremor before the massive earthquake. This is a supply-demand mismatch of biblical proportions, and the big banks, like Bank of America, are currently sitting on short positions that they can never, ever close without bankrupting themselves. We are fast approaching the moment where force majeure will be declared across all major commodities exchanges, effectively freezing your ability to exit the system with anything other than depreciated paper. This is the ultimate trap, designed to keep the masses trapped in the fiat matrix, while the elite move into the safety of hard assets. If you do not have physical delivery in your possession right now, you are essentially gambling with a check that the banking system has no intention of cashing. The secret data I am tracking on the Shanghai-New York arbitrage suggests that the paper wall is about to crumble as the East demands physical settlement for every contract they hold. This is a geopolitical attack on the US dollar's hegemony, and silver is the primary weapon being used to expose the bankruptcy of the Western financial order. Once the vaults hit stage 0, the price discovery mechanism will shift from New York to Shanghai, and we will see a vertical price reset that will shock the world. The "Don't be fooled" warning in today's title is for everyone who thinks the current price dip is a sign of weakness. It is actually the final shakeout before the moonshot. The algorithms are being used to hunt for stop-loss orders, liquidating weak hands so that the institutional giants can buy back their shorts at a discount. This is a classic spoofing maneuver that has been used for decades, but this time, the physical shortage is too large for the trick to work for much longer. Central banks are currently hoarding gold and silver at the fastest pace since the 1960s, a clear signal that the people in charge of the printing presses no longer trust their own currency. They are telling you that inflation is transitory or cooling while they prepare for a hyperinflationary collapse that will wipe out 90% of the middle class's purchasing power. You must do what the central banks do, not what they say, and right now, they are exiting the dollar and entering the vault. The U.S. national debt is increasing by $1 trillion every 100 days, a terminal trajectory that guarantees the eventual destruction of the dollar's value. In such an environment, the only true safe haven is a physical asset with zero counterparty risk, and silver remains the most undervalued asset in human history. We are looking at a once-in-a-thousand-year wealth transfer where the holders of paper will be wiped out and the holders of metal will become the new landed gentry. I have seen the internal memos suggesting that delivery delays are being reclassified as operational adjustments to avoid causing a panic among the general public. This is a lie. A delay in delivery is a default in slow motion, and it is the first sign that the plumbing of the global silver market is completely clogged. When the dam finally breaks, the rush for physical silver will be so intense that the ask price will simply disappear from the screens entirely. The 114 price target is the gravity well that the market is currently being pulled toward as the fake paper suppression loses its grip. Every time the banks print a new billion-dollar short contract, they're only adding fuel to the eventual short squeeze that will propel silver into triple digits. You are witnessing the final gasps of a dying monetary regime, and the trap is the belief that things will ever go back to normal. I am monitoring the registered stocks at the COMEX every hour, and the data shows that we are down to the last few million ounces that are actually available for trade. Most of what is reported as total inventory is already spoken for by industrial giants like Tesla and Samsung, who are bypass buying directly from the vaults to secure their production lines. The retail investor is being left with the scraps, and soon even those scraps will be gone, as the supply is completely shut down. This Monday is the most critical day of the year so far because the paper crash is failing to discourage physical buying in the Asian markets. As long as the Shanghai premium remains high, the drain on Western vaults will continue at an accelerated pace until there is nothing left but dust. The banks are terrified because they know that once the vault empty headline hits the mainstream, the panic buying will be uncontrollable and the price will gap up $10 in a single session. Everything you are seeing in the news today is a distraction from the fact that the foundation of the debt-based economy is rotting away from the inside out. Silver is the truth in a world of lies, and the powers that be hate it because they cannot print it out of thin air to bail out their corrupt friends. This is a battle for financial freedom, and your only defense is to remove your wealth from the digital system and place it into the physical world. I want you to ignore the noise, ignore the volatility, and focus on the cold, hard reality of the vault depletion and the rising industrial demand. We are in the end game of a 50-year experiment with fiat currency. And history shows that these experiments always end with a return to precious metals. The stage 0 warning is the final signal that the exit door is closing, and those who wait for the perfect time will find themselves locked out. The LBMA going offline for certain physical tiers is the black swan event that no one is talking about, but it is the most significant development in the silver market in decades. It signifies that the primary clearinghouse for global bullion is no longer able to function as intended, which means the spot price is now a zombie price. The real price of silver is whatever you have to pay to get it in your physical possession, and that price is rising every single hour. This is your final warning to stay alert and not be fooled by the artificial red candles on your trading app as the system prepares for a massive reset. I will continue to track every ounce that leaves the vaults and every premium hike in the east to keep you one step ahead of the banking cartels. The 114 trap is set, the supply is being shut down, and the only question remaining is whether you will be holding the metal or the bag when the system finally snaps.